agent of the table. Our test of automated controls involve using our own information technology specialists to test the design, implementation, and operating effectiveness of automated controls. We evaluated the appropriateness of management assumptions and judgments and reliable and forward-looking models. By assessing the basis of a multiple economic scenario review and the weighting assigned by management, we determined whether the default risk percentage was reasonably calculated and correctly applied to the relevant buckets of accounts receivable. Based on our audit process performed, no adjustment to the financial statements will be necessary. Other information? Management is responsible for the other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statements and our audited report thereon. The annual report is expected to be made available to us after the date of this audited report. Our opinion on the consolidated and standalone financial statement does not cover the other information, and we will not express any form of assurance conclusion therein. In connection with our audit of the consolidated and standalone financial statement, our responsibility is to read the other information identified when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statements, or knowledge obtained in the audit, or otherwise appears to be materially misstated. When you read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the financial statement. Management is responsible for the preparation and for the presentation of financial statements in accordance with IFRS and Jamaican Companies Act. And for such internal control as management determines is necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statement, management is responsible for assessing the groups and the company's ability to continue as a going concern. Disclosing, as applicable, matters related to going concern and using the going concern basis of a company, unless management either intends to liquidate the group and the company or to cease operation, or has no realistic alternative to do so. Those charged with governance are responsible for overseeing the groups and the company's financial reporting process. The auditor's responsibilities for the audit of the financial statement. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance, the high level of assurance, but is not a guarantee that an audit conducted in accordance with ISIS will always detect a material misstatement that exists. Misstatements can arise from fraud or error and are considered material if, individually or in the aggregate, it could reasonably be expected to influence the economic decisions of users taken on the basis of those financial statements. As part of an audit in accordance with ISIS, we exercise professional judgment and maintain professional skepticism through the audit. We also identify and assess the risk of material misstatement of the financial statement, whether due to fraud or error. Design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for audit. The risk of detecting material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, coercion, intentional omissions, misrepresentation, and the override of internal. Let's obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group's and company's internal control. Also evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Also conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, whether material uncertainty exists related to events or conditions that may cause significant damage on the group and the company's ability to continue the going concern. If we conclude that the material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group and the company to cease to continue the going concern. We also evaluate the overall presentation, structure, and content of the consolidated and standalone financial statements, including the disclosures, and whether the financial statements represent the underlying transactions or events in the manner of the presentation. We also obtain sufficient appropriate audit evidence regarding the financial information for entities or business activities within the group to express an opinion on the consolidated financial statement. We are responsible for the direction, supervision, and performance of the group entity. We remain solely responsible for our audit opinion. We communicated those charged governments regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identified during our audit. We also provided charged governments with a statement that we have complied with relevant ethical requirements regarding independence and to communicate with them all relationships and other matters that may reasonably be thought to be our independence and where applicable related safeguards. From the matters communicating to this charge of government, we determined those matters that were of no significance in the audit of the financial statement and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulations precludes public disclosure about the matter, or when in extremely rare circumstances we determine a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Finally, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept, so far as appears from our examination of those records, and the financial statements which are included therein give the information required by the Companies Act in the manner required. The engagement partner on the audit resulting in this independent auditor's report is Raymond McFarland. Signed, BDO Chartered Accountant, and dated 19 December 2019. Back to the Chairman, thank you.
Thanks very much, Raymond. So Raymond McFarlane from BDO. Some of the AGMs, there's a lot of discussion about reading of the report, etc. Right now, we're not going to find it, but I know there are a lot of initiatives to address the matter. So hopefully, this is the last AGM of 138 that we'll have the pleasure of listening to our auditors read the report in its entirety. Just before we move into the resolutions, I want to just recognize Janet Stewart. Janet is over on the far side of the room. She works closely with our company secretary and is always at the meetings and making sure that she looks after all the recordings and helps to get all the minutes and everything to us on time. So we wanted to recognize her. Also, I have been able to meet the gentleman myself personally, but Douglas Tibel, former director, is with us. Thanks for coming, Douglas, and I understand that you're integral in the build-up of 138 as well, so I'm glad to have you. So moving on to some of the resolutions that we have to deal with. First resolution has to do with the director's report and the accounts. These reports and accounts have been with our shareholders for the requisite time period. And so the first resolution that we have before the meeting is as follows. That the director's report, the auditor's report, and the statement of account for the year ended 30 September 2019 be and are hereby received and adopted. May I have a proposer and a seconder, please? Go ahead, just state your name first.
Lancel Bloomfield.
Lancel?
Lancel.
Lancel Bloomfield.
Lancel. L-A-N-Z.
Oh, Lancel. Thank you very much, Lancel. And the seconder?
Devroid Davis. Devroid Davis.
Thank you very much. And so, before we take the resolution to the meeting, we'll open the floor for questions from shareholders on the accounts and the annual report. Just a reminder to state your name. Let's just make sure that microphone in the middle is functional. And if you're referring to anything in particular, just ask that you reference the page number for us as well. Yes, sir. Go ahead.
Good morning, my name is Michael. Just have a few concerns. Legal and professional fees are increased significantly, so I'm wondering why.
You have a page reference for us, Michael?
That is page 73.
73. Just want to make sure everybody is able to follow. So, Michael, there was an arbitration award to Prime Development. That award was made, I believe it was early in 2019. So the majority of the legal and professional fees were in relation to handling that claim against 138. Maybe it's an opportune time to say that that claim is fully behind 138, and at this point there are no further claims that are in front of us, legal or otherwise.
Okay, thank you. Same page, bad debt. Right, this is the amortized significantly.
That's same page 73?
Yeah, bad debt.
Bad debts. So it's one of the areas that we indicated that we needed some real focus on at 138. I know our CEO will cover it in detail in his presentation, but we have taken measures within 138 to have a real focus on the collections of our accounts receivable, because with these things, Michael, the more you have it drag on, the probability of you being able to collect is going to get less.
Yeah.
So there are certain things that you have to try to address, literally out of the starting blocks. Cranston has put things in place with his team, and he will share some of those details with us. In addition, there are provisions under the various standards. I believe IFRS 9 Where we have to calculate the expected credit losses based on the history, and the majority of what makes up those falls into two brackets. One is collections as it relates to the residents at 138, and there are some elements in there that relates to our partner at the university as well.
Okay. Also another concern about the repair and maintenance, right? It goes so high, same page.
Same page?
Yeah. From 29 million to 40.
So I would say, like any build out of any project, you're going to find issues that come from time to time. There is a related item in terms of the utility costs, which we have seen a very significant reduction in. So there was some repair items that were required to address the usage of the utilities, in particular water. So yes, you have seen some increase in the R&M expenditure, but that has come back to us maybe tenfold in terms of the reduction in the utility costs.
But the utility also increased to amortize it.
On a year-over-year basis, right? Because some of the extreme usages that we were seeing actually was experienced in the early part of 2019. If you did, and I know they're not in front of you, so hard to ask you to compare, but we can say that if the utility costs that we're experiencing in the current year is, as a percentage, Cranston, what percentage down you would say year over year? What's the percentage being? About 40% in terms of the reduction in terms of the current year that we're in. So it's hard to see from these numbers, but basically that is the reason why we had an increase in the R&M expenditure.
Okay, all right, thank you. I'm going to turn to the last one, page 39.
Page 39.
Yeah. Current asset. I saw you were receiving the receivables increased by about 6%. I want to make this so.
Are you referring to
Current asset?
Yeah, receivables is actually down from 330 million down to 236 million.
It is now 236?
Right.
It was 230, so it is down.
So it's down.
Okay. That is a good sign. And your payables also. I saw where it is down a little. What does that mean?
It's almost flat, 615 million to 607. It would be good if we could have it higher, but I think we try to be responsible and pay our bills on time as best as possible.
So that is it.
All right, thank you, Michael.
Good morning. Well, to the chairman, board of directors, fellow shareholders, and other members. Well, I want to start out just by... Well,
just remind us of your name, please.
Oh, I'm sorry. My name is Deborah Davis. I'm CEO of Caribbean Value Investor and shareholder.
Welcome.
Thank you, sir. All right, so to start, I'm going to start on page 38, looking at the consolidated statement of profit and loss. I want to highlight, firstly, in terms of our revenue, 2019 being the first year that 138 Student Living is recording income above $1 billion. So I would like to commend the board as well as the management on achieving that milestone. All right. However, I'm noticing where we have a situation where profits from operations has actually gone down, moving from 315 million to 260.9 million. I was wondering if you could expound on what are the possible causes for that.
So we've had a couple of items which have really come in, especially in the early part of 2019. One was the award, the prime. The exact number slips me at the moment. 52 million. That's straight into the P&L. In addition, the same item as it relates to increasing utility costs. and the water in particular was a fairly big item in the year as well. So those, I think, are the two main drivers that have impacted the expenses that has resulted in a reduction in the operating profits of 138.
Okay, thank you, Mr. Chair.
No problem.
In relation to finance costs have actually been reduced from 406.39 million to 208.53 million. Could you expound on the contributing factors for that? And it's a good sign, so...
Yeah, it's a good thing. It's really been driven by the reduction in the interest rate.
Okay.
And the vast majority of the facilities we have are variable rate.
Oh.
So we are taking advantage at this point in time with a low interest rate environment.
Okay, thank you. I appreciate that. And that's also a very good sign. The last thing I want to touch on, well, the last thing of concern to me is the loss before taxation. I'm recognizing that though we have a significant decrease in terms of our losses, we are still not at the point where we are actually profitable from operations. The question here being, could you give us a timeline, given all of these new things, as to when we can expect our company to be realizing profits from operations?
Everett, I think the whole board and the management shares the concern as well. If you're able to take a disaggregated look
Yes.
at 138 in terms of quarterly, even over 2019, what you see is that since Q4, that's when we have started to have a turnaround. Not big enough to be able to offset on a year-to-date basis, especially as a result of the two exceptional items that your earlier question has highlighted, being the award for the arbitration award, as well as the spike in the utility costs. When we look at Q1, for example, which we published recently, that has continued the trend from late 2019, and our expectation is that we will continue to have a profitable position from operations going forward for the balance of 2020. But I must say that there are some real key areas that we have to continue to focus on, and that's where we're trusting Cranston and his team to continue to be vigilant and to keep up the good work, because the turnaround has been it's been quite significant and quite sharp, and really we have to just keep the focus to make sure it continues into the future.
Okay, thank you, sir. In response to your answer, I realized I had actually covered your Q1 earnings. Of course, we saw where you had made a complete reversal of the losses and we're actually in profit. I believe earnings per share adjusted were around 44 cents as compared to a loss of, I believe it was 11 cents or something thereabout. Hopefully I won't be quoted on that.
Mm-hmm.
Despite, it is significant, a 44 cent per share earning just in a single quarter. There was a note about a valuation, I'm sorry, I'm not recalling the exact term, but it said it amounted to the revenues. It related to a collection that was actually recorded on the book. I'm not recalling the exact term that was used to a one-off gain or something to that effect.
Right.
So could you adjust it for that? We saw where profits would have actually been around 33 million, which means your first quarter would have still been a profitable one from operations. I'm assuming then that should we see that trend continue, is it safe to assume that we could be at least a break-even point this year?
All right, so I know we're not really having 2019, 2020 year in front of us right now, but since you brought it up, just to say, yes, there was some one-off item or a single one-off item in Q1 results. There's also an item that we expect to be a recurring item for all the quarters, and all things being equal with Cranston and the team having their hands on the wheel, we do expect the operations to be profitable going forward.
Thank you, Mr. Chair. And my last comment will be to highlight and to congratulate the team and management on our first year profitable in terms of our profit per stock unit.
We can clap.
Yes, certainly. I'll be sure to applaud for that. So, thank you very much. That concludes my questions.
Morning, Mr. Chairman.
Morning.
My name is Lancel Bloomfield.
Yes, London.
Page 68, note D2.
68. Give us a chance to catch up, London. Okay, D2. Yep.
Under the aging of trade receivables. Mr. Chair, there is a 254 million owed by UWI with an amount of 86.65 million expressed as credit losses. Can you please give us some more information on this?
So, Landon, first let me just say that the relationship with UAE is not only significant, but there are significant receivables and payables between the two parties. What we have agreed to do is to make sure that there is a concentrated focus to have all the numbers reconciled together. And we continue to look at ways of partnering with the university where, you know, the various downstream effects can be beneficial to both of us. So there, in relation to your specific question, there are some claims that have been made by 138 as governed by our concession agreement. And we have discussed those and presented those to the university. And as part of, I believe it's IFRS 9 Seymour, you know, we have had to go through our exercise, and it, you know, it has a number of variables in there, including, you know, past history, etc. And coming out of the calculations, that is the number that we are putting as a problem.
Right, accepted. Mr. Chair, the business model that this company developed and brought into being by providing housing solution for students at the UWI campuses. In relation to future earnings and businesses, does this company have any plans to approach the other campuses, i.e. Kayville and St. Augustine, for future investments?
Let me answer in this way, Landon. I think the first order of business for the team at 138 was to be able to move the operations to be efficient and profitable. I think to a large extent we have been able to check that box. Notwithstanding, we have to keep really focused on our hands on it. I believe the next order of business is that there are some maybe our debt profile and our balance sheet that we need to address some of the items there. And I think that's the next immediate thing in front of us. But in terms of growth opportunities, it is something that the board is definitely contemplating. There are a couple of opportunities that might be a little bit more, let's call them low-hanging fruit as far as Jamaica is concerned. And looking elsewhere outside of Jamaica, not only in the Caribbean, but potentially further afield, is something that's also on our radar. But as you can appreciate, Ansel, we can kind of move from ground one up to ground 10 in one go. So we're kind of taking it step by step.
Accepted. And lastly, I want to use this opportunity to commend the company for having its AGM at this facility this year, and hoping that the AGMs will improve as time goes by. I have spent a lot of time lobbying Mrs. Marinette Lee for an improvement in every aspect of the AGM. And to have the AGM at this facility closer by, you don't have to travel all the way up to the UA campus.
and to see an overall improvement, I hope, in the latter part of it later on, then I really salute you and I commend the company for doing that. I thank you very much.
All right, well, we appreciate the comments, Lance, and we'll continue to try to see how we can improve the proceedings and see if we can get a lot more investors spiked up to be able to come to the AGM as well and fill the chair.
Thank you.
All right, so look, Mr. Staples.
Mr. Chair,
Yes, sir.
I am not a shareholder, but I'm asking your permission to ask 2 questions.
Permission granted.
Thank you very much, Mr. Chair. Mr. Chair, if you turn me to page 28.
Thank you.
As indicated there, Mr. Chair, the top 10 shareholders own 92.06%. And the amount of, the number of shares that are issued and fully paid is 414,500,000. And of that amount, 381,569,922 or 92% are held by the top 10 shareholders, which means that you only have 32,930,078 shares to the general public. These are the shares, Mr. Chair, that are traded on the stock market. The top 10, 16 shareholders hardly trade their shares unless there's a cross. But the only trades that take place on the market is the 32,000. Is there a possibility, Mr. Chair, that there could be a split so that more shares could be on the market for investors to purchase?
I wouldn't say it's an impossible request, Mr. Staples. Something I think we will look at as we look at dividends and other important shareholder issues as well. Some people really do believe in stock split and what it does, not only in terms of number of shares traded, but in terms of valuation. So we'll consider it for sure at the board level.
Because when you observe on a daily basis what happens on the trading, just a few shares have been traded, and it's difficult to really get shares in this company.
Well, recently, if you've been noticing, there has been quite a thing. So I think there is some amount of, excitement around 138, and hopefully the performances can continue. We'll get a little bit more trading as folks who may have bought, at a lower level decide to take some profits, and folks who want to come in are able to come in. So we take the suggestion and we'll discuss it for sure.
Yes, I would appreciate if that would be taken into consideration. A split be done,
Okay.
so that more shares can be traded on the market.
Sure.
Turn me to page 34, Mr. Chair.
34.
And with your permission, I'm addressing this to the auditor with your permission, Mr. Chair. Mr. Auditor, ECL, expected credit loss, impacts negatively on your bottom line. In other words, it is an expense that hits the bottom line and reduces the amount of money that can be reported as a profit. Mr. Auditor, the assumptions and the judgment that go into these numbers for ECL, the possibility exists that there could be material misstatement in these numbers. Your comments on that?
Well, the possibility does exist, and so we go through various auditing procedures to reduce those risks to a minimum. But there's always, it's judgment call, so there's always some element of risk in these judgments.
How do we know as shareholders when there is this misstatement taking place?
But there's a presumption that there's misstatement.
Yes.
What is so possible? The auditing procedures are designed around the primary objective to reduce the risk of misstatement. So the procedures which are executed are intended to have the outcome that those possibilities of misstatement are reduced to a minimum.
So am I to understand, Mr. Chair, that this possibility exists? Am I correct? This possibility exists, that there could be a misstatement in the calculation when you use the assumption and the judgment.
So let me just say, Mr. Staple, that I think in a number of instances, there's estimates and assumptions which are used in the overall preparation of the financial statement. As it relates to particularly the ECL calculations which are done, and my understanding, you can correct me if I'm wrong, Raymond, is that first of all, that exercise is done by the team at 138, and then the auditors will do a review to satisfy themselves from an independent standpoint that the assumptions and estimates which are being incorporated are reasonable. And I think that's the case of any single estimate that is done in any area of the preparation of financial statements. So the ECL calculation is no different than any other area of the financials where estimates and judgment come into play.
You see, my concern, Mr. Chair, is that the IFRS has now introduced this line item.
Fully understand.
And this line item impacts significantly is an expense that impacts significantly on your bottom line. And if this impact is significant, then shareholders will have a difficulty in getting a dividend payout from the company. So I would like to make sure that this line item, expected credit loss, is properly and professionally investigated and done so that we can be assured that that expense inclusion
is as accurate as possible.
Is as accurate as possible, because
and I think
shareholders are going to stand to lose if they don't.
Agreed, Mr. Staple, but I think what you have to do is to put your trust in the independent auditors. And I can promise you they are independent because they ask us tough questions. Sometimes you have to ask us to just ease off a little bit. But they do their work professionally, and I think you can be satisfied that they are reviewing and are satisfied that what we have put forward is more than reasonable.
I have all the confidence in them that they will work. And lastly, Mr. Chair, if you turn me to page 42.
You're going from 2 to 3 now, Mr. Staple, so
Yes,
we'll accommodate you. Go ahead.
Yes, page 42. Thank you very much, Mr. Chair. Page 42. When we look, Mr. Chair, on the topic, 138 Student Living Jamaica Limited, Statement of Profit and Loss and Other Comprehensive Income. And when we look at the same topic on page 38, what's the difference in what is being presented here to us, basically? The reason I'm asking that is, when we look at the net profit for page 42, there's a loss. In other words, all the profit that was made in 2018 was wiped out in 2019. But on the first page, page 38, there's nothing like that.
Okay.
What's the difference between the two pages?
So, pages 38 to about 41.
No, I'm talking about page 38 because I'm giving that line item.
I understand, but I'm answering you fully.
Yeah.
Pages 38 to 41 deals with a consolidated 138 Student Living, which includes its subsidiary
138.
138
Restoration Limited.
Limited. Whereas page 42 and the other pages deal with the company, 138 Student Living itself. So it's a consolidated view versus the company view.
What makes up the consolidation?
So the consolidation is made up of 138 Student Living the company, and it's wholly owned, right? Wholly owned subsidiary, 138 Restoration Limited, which is specifically formed to deal with Urban Hall.
Gerald Laylaw. The Gerald
Laylaw.
Laylaw flats.
Urban Hall, Gerald Laylaw.
So in other words, the restoration and 138 student living forms the consolidation. I just want to make sure that
Absolutely correct. You got it.
and what causes loss in 138 student living Jamaica Limited? What caused that loss?
It's the items that we had discussed before, Mr. Staple, which we are on the road, well on the road to reversing those losses. The award, arbitration award, the utilities, etc.
All right. So for 2020 then, we are expecting to see much different results, basically.
Yeah.
And to the interest of shareholders.
Yes, again, if you look back, what has happened in Q1 of last year, Q4 of last year, Q1 of this year, the indications look fairly good.
All right.
Thank you.
Okay. Thank you.
Evroy, and then we'll take the mic off.
Okay, so firstly, I think it would be remiss of me if I did not mention just the improvement in the share price that we have seen over the past month and even more significantly over the past 2 years.
Right.
And I say this in relation to the point that Mr. Staple raises with regards to the possibility of a stock split. I will say here that I'm also in favor of that proposal. And so I want to just highlight Mr. Staples.
The reinforcing Mr. Staples.
Yes, I'm putting that forward.
Well, again, we'll take it under consideration.
Okay. As it relates to the improvement in the share price, and of course, this is indicative or rather supportive of the improvement in the underlying fundamentals of the company as a whole. 138 Student Living, the ordinary traded stock, just over a year ago was trading at around $3 per share. At our last AGM, a visitor had suggested that he would not be willing to pay more than $2 per share for stock. Had that trade actually been successfully executed, then a person who would have made that purchase would be seeing at least a 4x return on that purchase, and that's a remarkable return. That would basically outstrip the performance of any other stock over the 1 year period, even the best performing stock for 2019, which was Fontana Limited. I hope I can say that, thank you. But in any case, what I'm saying is that we have seen an improvement in the underlying fundamentals of our company, and clearly shareholders and persons, the investing public, have reinforced their trust in our company. As it relates to the fair value of our company, speaking with relation to a year ago, the estimated fair value was around $5 per share. The company was trading at a significant discount to that. Today, if you calculate our book value, the value come out which is an approximate $13 per share, even adjusted for our preference shares. What I'm saying, therefore, is that we are still in a situation where our company trades below its fair value. All right, and that's not an endorsement or anything. I'm just highlighting based on our analysis.
Sure. The only response I'll have is that the value of 138 has to be borne out as we, first of all, continue to partner with you to be able to help the university to grow the offerings to students, the number of courses, folks who are able to be attracted from overseas, providing good accommodations for increased number of Jamaicans. Let's not underestimate the symbiotic relationship that exists between 138 and the university. I mean, that remains one of our primary goals in terms of the company. But again,
Fully appreciate
our
it,
shareholders and investors do require and pressure, the company for adequate returns. And so within the context of things that we are able to control, within the context of other areas of the business that we can grow, the push is to continue to grow top and bottom line of 138.
Thank you very much, Mr. Chairman. I think I'll reserve my question as it relates to potential growth or growth projections going forward
You will
until
see.
we hear the
You
CEO's
will see from the
presentation.
CEO.
Thank you very much, sir.
Michael, you have a question?
Just one thing here, Mr. Chairman. Staff costs. It is 873,
Yeah.
load 9. I saw we had moved from 77 million to 144 there.
Right. Two drivers. The first is that there are a number of contracted services that we're engaged in, which have now been taken on as part of our staff review. So in other words, they're not contracted out anymore. The folks have been put on staff and they're doing multiplicity of tasks much better than what the contractors were doing. And so that's a positive for 138.
So they are no employed.
They're no employed, correct. That's one of the main drivers. The other one is that early in 2019, we did do some adjustment to salaries because we realized the remuneration was below market. And let me tell you, if you're going to demand from your people to excel in the work that they do, you need to be able to compensate them properly. So an exercise was something that's a reason why the staff costs.
Okay, right. Thank you.
All right, thank you. So I think we have exhausted the questions. So I want to thank everyone for the input. Just want to remind everybody where we were, which is the resolution that was in front of us, that the director's report, auditor's report, and statement of accounts for the year ended 30 September 2019 being hereby received and adopted. It's already moved and seconded, so at this point I'll just ask, all in favor? Thank you. Any against? The ayes have it, and the motion is carried. Going to move on now to resolutions dealing with the election of directors. I want to say that we do have three resolutions in front of us. And we know we could have done it where we have one resolution to do it en bloc. Really that would have been two resolutions instead of three, but we have just decided to go ahead with single resolutions at this point in time. So that's item number 2 on our agenda. It's there for us to see. And the first resolution that I put in front of us is that Director Peter Pearson, retired by rotation and being eligible for reappointment, be and is hereby re-elected as director of the company. And I have a proposal and second Douglas, thank you very much, and seconded by Michael. Janelle, I know you have the full name. All right. All in favor? Good. Any against? All right, the ayes have it. Declare the resolution carried. Resolution 2B, that Director Ms. Brenda Lee Martin, retired by rotation as well, and being eligible for reappointment, be and is hereby re-elected as director of the company. May I have a proposal again? Thanks, Lanzen. Seconded by Douglas. Thank you very much. All in favor? Thank you. Any against? The ayes have it. And the last director on this current list, Mr. Ivan Carter, again retired by rotation and being eligible for reappointment, being hereby re-elected as director of the company. Thanks, Michael, as a mover, and
Deborah.
Deborah, seconded. All in favor? Thank you. Any against? Ayes have it. Resolution number 3, I'm going to ask our Director John Lee to come and handle this, please, as it relates to your chairman. Yeah.
Thank you. Good morning, everyone.
Good morning.
This is resolution 3. The directors may also appoint any person to be a director pursuant to Schedule 1, Clause 103, and having been appointed to fill a casual vacancy since the last AGM is eligible for re-election. Resolution 3 states that Ian Prasad, being a director, is requiring the accordance with the Articles of Incorporation. So the resolution is that Ian Prasad be and is hereby re-elected the director of the company. So may I have someone to propose and a person to second? Michael is the proposer and Douglas the bell. Thank you both. Will second it. Those in favor? Those against? No dissent? Thank you. Ian? That was a bloodless coup.
Thank you very much, John and shareholders. You see how smooth and everything John Bishop does that. You just continue to share the meeting and take over. Well, thank you very much, John. So that brings us to resolution number 4, to authorize the directors to fix the remuneration of auditors. No, sorry. Fix the director's remuneration. All right, so here we are. That the directors be and are hereby authorized to fix their remuneration for the ensuing year. Can I have a proposer and second?
Proposal, Delroy Davis.
Douglas seconded. All in favor? Thank you. Any against? Declare that resolution carried. Resolution number 5, which is to appoint the auditors and to authorize the directors to fix their remuneration. The resolution reads as follows: that the remuneration of the auditors, BDO, who have signified their willingness to continue in office, be such as may be agreed between the directors of the company and the auditors. Then I have the proposal. What's the name? What's the full name, Akim? Akim Fuller. And seconded by Douglas. And Douglas, those in favor? And any against? I have it, declare the resolution carried. All right, so we're going to transition now. The formal business of the meeting is really concluded. I'm going to invite our CEO to come and do a presentation for us. Just before he comes, I want to indicate that Cranston Yuan has been engaged as our CEO since about June 2019. I have to really thank former chairman Richard Biles and Director Carter and the team, having found Cranston. He has joined the team and he has had a really significant impact in a fairly short space of time. He has come from a very diverse background, which includes involvement in heavy equipment, energy efficiency, consulting, shipping, property management. Quite frankly, I'm not sure if there's anything that he has put his hand in the past. He's a certified accountant and also has a master's in business administration. Cranston is definitely a hard worker. There is no two ways about it.